Hello, I'm Natasha Chilingarian.
And I'm Michael Ogden. Welcome to Shared Accounts with CU Times. This month on the pod, we're digging into the complex world that's been created by credit unions and fintechs. But today, we're discussing credit union fintech partnerships. Is that what we're calling them? Well, we're going to talk about that with Ron Shevlin at Cornerstone Advisors.
But before we get to that interview, I have something very special to share with you. We're going to change up the podcast format a little bit. So every Monday afternoon, Michael and we always carve out some time to meet and talk about our op-ed articles that came in, stories, other things we have to get done for work, and deadlines for the week. But then we always end our chats with a lively discussion about what we watched over the past week.
Yeah, it's one of my favorite meetings, in quote, for the week.
Mm-hmm.
It just gets the week off on a much better start, I think. So we want to bring that element of our newsroom into the pod to share our accounts, pun, of our lives with you. So Natasha, as we talk about every Monday, what'd you watch this past week?
Well, yeah, I watched quite a bit. I'm kind of embarrassed to admit, a lot of TV this past week.
All right.
I watched a lot of true crime, which I often do. I don't think that's worth talking about because, I watch so much of it that they just all start to look the same after a while. So that was pretty unremarkable.
Yeah.
But there were two watches that I wanted to mention that were kind of out of the norm for me. They were both like major tearjerkers, both on Netflix. So one of them was that movie, The Society of the Snow. If you remember, Michael, I don't know did you ever see the movie Alive back in I think it was early 90s?
Oh, the soccer team eating each other. Yeah. Okay.
Yeah, pretty much. It was actually a rugby team from Uruguay, and on this plane crashes, gets stranded, and the remaining passengers basically have to end up eating their dead friends, the ones who didn't make it. So it was very disturbing in some ways, and also kind of a, very tear-jerking at the end when, because there were some survivors and you kind of see that. So kind of emotional. But I did not actually cry during this one. However, then I decided to watch the series One Day on Netflix, which is, I guess it's like the most watched show right now, or maybe even
I don't know
ever.
this one. Okay.
Oh, really? Okay. Well, you should maybe, I don't know, maybe you would like it. I'm not sure, but it's like a romance. It's
Okay.
they're like two people that meet at the end of college, and then they kind of have this sort of undefined relationship, and it's like over the course of 20 years, and it revisits them on the same day every year, going through the years. And it's
wow.
Oh, it's just, I loved it until the end. And I don't want to say what the ending is in case some of these listeners are still planning to watch it, but oh my God, excruciating. I was a wreck. And like I said, I usually don't cry. Like I can compartmentalize when I'm watching something, but couldn't sleep, just crying. Oh my God. So, but I don't regret watching it. It was still, I think it was worth it. Like it wasn't one of those times where it's like, oh, I can't believe I just wasted 2 hours of my life on that. I was so pissed by the ending. Like it was.
Oh, that's awesome.
Anyway, those were my highlights of the TV week.
Thanks for sharing.
Yeah. Michael, what did you watch?
What did I watch? Oh, you know what? I did finish the season finale of True Detective. It was fine.
Okay.
Really dark show.
Yeah.
Whatever. I've seen them all. It was fine.
Right.
Just like two movies I saw in the past week that I wanted to point out. One, it's an Academy Award nominee. That's why I watched it. Anatomy of a Fall. Amazing movie. It's like,
what is it about?
Courtroom. Well, it's kind of like a courtroom drama about this family, this couple and their son who is blind. And how did this guy die? How did the husband die? Did he fall? Was he pushed? What, happened? And it's a whole trial about that. But it's not at the same time. And I can't go any further without giving anything away because it was really, really good. I really enjoyed it. Best dog acting I've ever seen. The dog that's in this movie is incredible. That's all I'll say. So I highly recommend it.
Yeah. We need a new category in the Oscars for the best dog.
He was so
Sounds
good.
like he would be the obvious one.
I can't tell you what he did because it's incredible.
Cool.
The other thing, just very quickly, I watched a movie that's been on my radar for a very long time. It's from 1985, 86. It's a Japanese movie called Tampopo. And it's so silly, but I would recommend if you dig Japanese movies, but it's described as a ramen Western. I don't know why they call it that.
Okay.
It is all about ramen and food, and it's just gorgeous, the food shots in this. They eat so much ramen, so much food that's just really amazing to look at. But it is a bizarre movie.
Okay.
I believe it's on Criterion. I enjoyed it. I laughed like crazy at the end. The ending shot just made me laugh for about 6 minutes straight. That's all I'll say about that. So,
Okay. Wow, ramen western. I think if there was a category like, if in an old Blockbuster, they would have on the wall ramen westerns. There would be one
horror.
movie. There would be
Yeah,
this one movie under there. That is very odd. Sounds fun though. Yeah.
that was it. Tampopo. And that's what I watch.
Okay, cool. Okay, I personally just kind of thinking back to what I watched the past week, I just would like to get my mind off of tragic love stories and
That's
thoughts
fair.
of eating my dead friends to stay alive after a plane crash. So let's move
Yeah.
on to today's topic, which is fintech.
Okay.
Michael, I wanted to just get your thoughts first. Where do you think credit unions are at in their relationships with fintechs today?
That's a big question. But
Yeah,
I guess my short answer is, where are they in their relationship? It's complicated. Like that
yeah,
movie, there's a real problem happening in there. The push pull of it. Regulators can't get their act together because Congress won't let them. Todd Harper with NCUA, he is pushing for third party authority,
right.
but I don't see that happen. Even with Otska on the board now, and they're a little bit more liberal leaning, but I don't know if Congress is going to give them that. But I think the relationship in general is fraught. That's my
Yeah,
best word. What
okay.
do you think?
Yeah, I would agree with that. I think there's a lot of complication there. There's some confusion. I think there's always been a little confusion about, are fintechs our competitors or are they our partners? Are they a friend or foe?
Yeah.
And that's kind of changed over the years and also just depends on, I think, what the fintech is doing. Is it offering actual banking services versus
Hmm.
services for the credit union? But I think another thing that has stood out for me is I listened to a webinar a couple of years ago and actually had NCOA's Rodney Hood on it. And he
Yeah.
talked about how, there are a lot of risks around working with a fintech, as is with any third party, but that in general, the consensus is it's more of a risk not to partner with a fintech because then you're not going to be able to really offer all the products that you need
Yeah.
to compete. And you can't do that on your own with your limited resources. So I
Right.
thought that seems to be consensus. Is a lot more partnerships happening, but yeah, I agree. There's still a lot of kind of confusion. So,
But see, yeah, part of that risk is responsibility. And that's
right,
where I feel
right.
that fintechs are not being held
That's
to
true.
a
Hmm.
real accountability of being that partner, being that friend, being that vendor of the credit union. And regulators, I mean, I wish them all the best. And I hope that they can kind of clamp down and hold some accountability with these data breaches.
Yeah. Oh, yeah.
It's
They
really
need to get that
maddening.
figured out. It just makes things more difficult
Yep.
for the credit unions. So,
Yeah.
but anyway, it is a confusing topic. We were lucky this week to get our guest who will help kind of shed some light and kind of maybe uncomplicate things a little bit, I think. And so the guest was Ron Shevlin, Cornerstone Advisors. I
Mhm.
was really excited to bring him on because he's been a voice in the industry for a long time. I actually remember interviewing him about like 13 years ago when I was still a freelancer at CU Times. So I was
Okay.
particularly, excited. I don't think I've even spoken to him one on one since. So that was pretty
Yeah.
cool.
We had a lovely discussion. It was great.
Yeah. Yeah, we did. Yeah, I felt like it was really interesting. We kind of discussed how much of a gray area there is around just the terms fintech, vendor, and even QSO. Like, do they mean the same thing? And what are their roles? Who's a competitor, who's a partner? And, Ron really puts that and a lot more into perspective.
He does.
Yeah, we have all of that coming up next for you.
All right. Thanks, Natasha. Thank you for listening. Welcome to Shared Accounts with CU Times. I wanted to take a minute to share with you some information on our Tech Solutions Showcase webcast series. If you haven't joined one yet, I highly encourage you to take a listen. Basically, in a nutshell, these are tech-focused webcasts that will address the hottest tech trends and challenges and include tech industry leaders sharing their best practices as it relates to tech prominence in the credit union space. We also do offer our vendors and suppliers an opportunity to share their solutions and expertise with some attractive sponsorship opportunities. The first showcase is scheduled for April 23rd, right after tax day. So mark your calendars, April 23rd. Visit cutimes.com/webcasts. That's cutimes.com/webcasts with an S to register for what will be a very informative and valuable hour.
Credit union fintech partnerships, let's jump in. Joining us in the virtual studio today is Ron Shevlin with Cornerstone Advisors. Ron, thank you for joining us today. It's great to have you.
Thanks for having me.
Yeah. So now, Ron, where are you calling in from? Because I know Cornerstone Advisors is based in the Phoenix area, but I wasn't sure if you were there as well.
I am not. I live in the Boston area where I've been for 30 plus years now. I've been with Cornerstone for 8.5. Did not move down to Scottsdale when I joined. I married a Norwegian. They melted 80 degrees. And so there was no way we were going down to the Southwest. And by the way, my wife just loves to point out whenever I say that I can't take the heat either. So she's quick to point that out, even though I'm not Norwegian.
Oh, right. Yeah. Well, it sounds like you're in the right place then. Arizona getting hotter and hotter. So I don't blame you for not wanting to go down there. So now, before we get into the meat of the interview, I just wanted you to give our listeners who may not know you some background on your expertise, because I know you've been a well-respected voice in both the banking and credit union industries for many years. But yeah, can you just go ahead and tell us a little bit about your background, specifically as it relates to consulting for credit unions?
Sure. I am basically a consultant, an analyst, and a writer. I have been in the consulting world for a very long time. Left kind of the consulting world to go into the analyst world, was Forrester Research for a number of years, and an IT group, which focuses only on financial services. And that got me very deep into the credit union space. And then left 8.5 years ago to join Cornerstone Advisors to basically start a research practice to do add something different than what they were doing from a consulting perspective. And for those of the folks in the credit union space, many are familiar with Cornerstone because that is a core market that we serve. In fact, we only serve mid-sized financial institution. A lot of what I do these days is focused on that community financial institution space.
So, Ron, as Chief Research Officer over at Cornerstone Advisors, besides spending your mornings at Dunkin' Donuts, how do you actually spend your time? What does your typical day kind of look like?
Oh, man, listen, I don't really want to tell people that because they're just going to get all pissed off and mad at me when they find out that, I'm pretty much spending my day writing a few things, talking to a bunch of people on social media, and then heading out to conferences in really nice places to give presentations. But reality is that, yeah, I write a lot and I read a lot. And it also causes me to talk a lot to people, both to people and at people. So basically a lot of what I'm doing, unlike a lot of analyst firms who have a subscription stream of research, we don't. Everything we do is commissioned generally by technology companies who are looking for content for their content marketing efforts. So we've got a whole slate of projects that we're working on, and I'm fortunate to have colleagues who handle some of it, but I still do a lot of the writing, the research reports. So every day my head's in data or is in the issues of the day, and I'm writing. I spend a lot of time writing.
Well, it sounds like a dream job to me. I mean, we're kind of in the same boat with the writing. We should have a contest of who's writing more words per day here between the three of us. Okay, so Ron, let's go ahead and get into the meat of the interview about the fintech topic. So about 10 years ago, that was about when I started in my current job here at CU Times. I remember fintechs were mostly just referred to as disruptors, people saying, oh, they could put your credit union out of business. And now, obviously, there are still some competitive threats out there in the fintech space. It seems like partnering with fintechs to expand offerings is now kind of a standard practice for credit unions. So I'm wondering if you could talk about, are there any defining moments or events from, say, this past decade or so that kind of led credit unions to go from, oh, they're strictly competitors to, hey, let's try working with some of them. And you kind of use that to improve our services.
Yeah, so there really is a defining moment or a set of moments that really tipped the world apart, from disruptor to partner or collaborator. But let me just say before I get into that detail, I think there were a few of us who said from the beginning this isn't going to last as disruptors. And yes, there are a few fintechs who have a business to consumer focus, who have become successful and perhaps compete. But the proclamations of the fintech enthusiasts from 10 years ago about how banks and credit unions were going out of business because of these, I mean, that never played and was never going to play out that way. The defining moment that you allude to, Natasha, is really the run up in interest rates, because that responded to and changed the economic situation in the US. And first of all, what it meant was that the early fintechs who had been kind of moving along and, not going out of business, they're not necessarily gaining a lot of traction in the market, really got hammered from a profitability perspective. And what really happened was that the VC market changed from throwing tons of money at fintech startups to looking at their portfolios and saying, all right, you guys got to start making some money. And there was no money to be made because the business models were never there. You can't make money in this business solely on interchange, can't make money solely on consumer fees. Interest is important. And in a low interest environment, when there wasn't a lot of money being made on interest rates, these fintechs were able to kind of survive and make it for a while. But once the interest rates went up, a whole host of factors changed in the industry. But, it's important that we not look at the fintech world as this homogenous world. I mean, clearly there are fintechs like Chime and Robinhood that effectively compete with established financial institutions. But there is a whole host of fintechs that were never established to compete with financial institutions, but instead to support and enable them, often by upgrading the infrastructure components of the financial services and banking world. So they were designed from the start to be collaborators versus competitors.
I do feel like, Ron, you mentioned the doomsayers of fintech, a decade ago. I feel like at the time, those same people were also projecting the demise of the branch, and that also did not happen. In fact, branches are thriving. But kind of moving on from that, what makes a fintech company a partner in a credit union's eyes instead of a competitor?
Well, it's all about business model, but let's get into some terminology, Michael,
Yeah,
because I actually
yeah.
published something not too long ago, a month or two ago at the longest. And I basically said that financial institution slash fintech partnership craze isn't going to last past the end of this decade.
Hmm.
And the reason I said that is because it has to do with the term partner. I think we use the term partnership a little too indiscriminately in the industry. If you look it up in the dictionary, and I don't know what the actual dictionary definition is,
Yeah.
but I'm sure it's going to imply shared risk and reward. And there really isn't much shared risk and reward in a lot of these credit union fintech relationships. Fintechs, in effect, are becoming vendors. They are just pure and simple. They have a product
Hmm.
and a service to sell. It is no different going to a fintech like Z Suite Technologies that provides some great products and services around escrow accounts as it is going to directly to FIS or Fiserv. In fact, if we kind of project out what the evolution of call them the enterprise fintechs or the B2B fintechs, those that serve the financial institutions, what's their end game? Their end game is the same end game it's been for the past 20, 30 years. Somebody else is going to acquire you. Some of them will get maybe big enough to go public and go the IPO route. Some of them may be happy staying as a privately held company. But if they're VC funded, that's not going to last very long. And so what's their out? Well, their out is getting acquired by FIS, Fiserv, Jack Henry, Q2 Alchemy, or perhaps a large loan origination system, or perhaps they become big enough to go IPO and then their growth strategy is to acquire other smaller startups. So, in the end here, and within 5 years, I think we're really looking at a just expanded world of vendor relationships, not partnerships. Now, that's not to say that credit unions could not establish some short-term partnerships with fintechs that are truly shared risk and shared reward type arrangements, but it's not likely that those type of arrangements are going to persist and last past a 2 to 3 year time frame.
So you mentioned a couple of names, Fiserv, FIS, things like that, organizations like that. Are those, I love that you brought this partnership topic or definition, because I 100% agree with you. So let's, I guess, agree to call them vendors maybe for this discussion. But are there some examples other than what you've said so far of fintechs that are competitors versus those that are good vendor partners?
The world really is kind of muddied, and I resist putting them into one bucket versus another. But
Yeah,
look, I mentioned that Chime is clearly a competitor to banks and credit unions to a large extent. And they're typically referred to as a neobank or a challenger bank, which is funny because they can't really legally be called banks because they don't have bank charters. But
right.
forgetting that for a second, I mean, clearly they're competing for the same set of customers. Now, there are, I think, I'm not exaggerating by saying there are hundreds of neobank challenger banks out there that have often come to market with a very narrow niche strategy. There's a challenger bank I love called Panacea Financial that focuses on young physicians. Not all physicians, young physicians, because they have unique needs coming
Wow.
out of their residencies after 12 years of college, and they have no credit scores, and no bank or credit union wants to give them a loan. But on day one, they're going to be making $150,000, and by year 5, they're going to be making $500,000, and banks want them to have their parents co-sign loans. How ridiculous is that?
Wow.
But there
Very
are a
niche.
whole,
Yeah.
but there's a lot of those niche players. And if you're a credit union serving and you don't have a community charter, but you've got a seg focus and have always had a seg focus, let's say, you're a teacher's credit union, there are going to be potentially niche fintechs, challenger banks, whoever, that have developed products and services that are specific to teachers and educators. Why not? Perhaps that's a partnership opportunity to offer those products and services. Because, look, and you guys know this very well, most credit unions really don't have a large, if any, product development staff in-house. The last 20 years have basically meant that your product development has been outsourced to your vendors and your core or your digital vendors, and you take the products they give you. I think and this is what's really driving a certain extent of the partnership activity, is the recognition on the part of credit unions that they can't compete on the market with generic standard products and services. They need to differentiate, not just simply with a better mobile app or a nicer website. That's just not doing it. They have to compete from a product quality perspective. And if there are companies out there, can't call them institutions because they're fintechs or technology companies, that have developed products and services that relate and focus on the field of membership you're already focusing on, well, hell, you can try to compete with them, or why don't you just partner with them? And I think that's what a lot of smart credit unions are doing now, is looking to a lot of these fintechs and saying, what do they have that we can offer our member base, and find ways, could be through a more of a vendor relationship, but it could be through shared revenue, shared risk, shared reward type of approaches.
Right. Very interesting. Yeah, that's a good point. It's not so black and white. Like, this is a competitor, this is a partner. It's more strategic. So yeah, that's a good way to look at it. Now, moving on, I wanted to bring up one of the findings from your recent What's Going On in Banking report. And just so our listeners know, that's an annual state of the industry report released by Cornerstone Advisors. Well, so one of the findings was that banking and credit union executives say that they feel more threatened by, the fintechs that you would classify as a typical competitor, neobanks, and also big tech companies, compared to in recent years. So what do you think is driving these executives to be on higher alert currently?
I think what it really comes down to are two things: deposit displacement and lending activity. Finally, they're feeling threatened by non-traditional providers. No question that, I survey consumers a couple times a year. It's amazing what percentage of young consumers, and for me that means Gen Zers and millennials, even though millennials are now over 40, which does not qualify as young. Sorry, millennials. Haha. You're
That's
not the
me.
youngsters anymore.
Yeah.
But compared to me, that's still young consumer. It's amazing what percentage of Gen Zers and millennials consider a fintech or a digital bank to be their primary provider. And a lot of that is companies like Square and PayPal and so forth. But up until now, I don't think the credit unions have necessarily felt threatened because the people aren't leaving credit unions. People aren't leaving banks to open these accounts. They're opening up new accounts. And so as they start to see the balances decline, and especially now with so much of with the interest, again, it goes back to the interest rate rise. Thanks to the interest rate rise, deposits have moved, and they've moved not just to neobanks, fintechs, and big tech companies, but they've moved, of course, to money market investment brokerage companies. But this is the straw that broke the camel's back. And when they see how many of their members actually are doing business with Square, with PayPal, moving money through Apple Pay and Google Pay, and start to, see what Apple in particular is doing with an Apple Card, Apple Pay Later. They acquired a loan, not a loan origination system, but a loan underwriting company. You see what all of these companies are doing, and I think that's just raising the threat level in their eyes.
Right, right. Okay. Well, and then, if you look back, like especially before these bigger alternative financial services providers came along, you would think of a credit union's competitor, not so much as other credit unions, but as banks, just traditional banks, big banks. So, just given what you just discussed, how do you think the threat level of that credit unions feel from like the B of A's, the Chases, the traditional banks is compared to the threat they feel from these neobanks, alternative service providers?
Well, let me just share a data point first to put some things in perspective. So we've been doing the What's Going On report for 9 years now. And for at least 5 or 6, we've been asking about the threats. Just looking back 3 years, big tech banks like Apple and Google, the mega banks like Chase and Bank of America, and the large fintechs like Square or PayPal have traditionally been the top 3 threats. And even though those are the top 3 threats, in the past few years, it's been about 4 out of 10 credit union executives who list them, the 3 of them, as the top threats. This year, that percentage grew to nearly 60% across each of the 3 of those. So there is this heightened level of threat. But there's a couple of reasons why I think this is. First of all, I'll give you an anecdote. A colleague of mine was out doing strategic planning with a credit union, and it was a topic of mortgages. And he asked the management team, to what extent do you see Rocket Mortgage in your footprint? And the message from the management team was, we don't see them at all. Oh my gosh, you got to be kidding me. This is the largest mortgage provider in the country. But it goes to the myopic view of the management team. Yes, we don't see them in our market. Of course, you don't see them in your market because they don't have a branch presence and you're not seeing big billboards and stuff. But if you think your members and prospective members aren't looking at them and talking to them, you're crazy. I think what's shifted is I don't think most credit union management teams are as myopic as that one was a couple of years ago. I think they got the message. The competitor base is not just the physical institution next door, down the street, across town, whatever it is, but it is all of these digital players who don't necessarily have physical presence. But that said, listen, at the individual credit union level, you kind of have to look at it product by product, competitor by competitor. Not every credit union's in a market that has a large mega bank presence, different products that, will have different priorities within the credit union. And, you really got to look at the competitive set on a product by product level.
Ron, another finding in your report was that more credit unions are seeing fintech partnerships as either a moderate or strong driver of growth compared to the previous year. What are some of the functions or the products and services that those fintechs are bringing to their credit union, let's call them partners, that are actually helping?
There are 3 in particular, and it's funny because we're going to go back to the discussion of what's a partner versus a vendor. But
I was wondering why you were laughing. So yeah, okay.
the three areas are basically, and this is not in any order of magnitude, but just the top
Sure.
three: digital account opening, fraud detection and prevention, and fraud management and risk management in general. And then lump everything else into sort of that new product, new service category. Whether it was something like escrow, like I talked about before, or very popular are things like subscription management tools or other personal financial management related things, not related to budgeting, which has been out there for a long time and doesn't really get used all that much. So those are the three areas. The first two really don't lend itself well to the partnership context. The third one definitely does, because it tends to have more of a revenue component to it. So there's something to be shared there. But this goes back to the terminology problem. When we ask credit union executives in the survey, what areas of the business are you turning to for partnership? At the top of the list always seems to be digital account opening. And I look at it and go, that's not a partnership, that's a vendor relationship. But what am I going to argue with them?
Right. Okay, sounds good. So this is aside from the products and services, that fintechs can kind of help bring to the credit unions. But on the topic of fraud, which is another, we could do a whole separate podcast on that, I'm sure. Another finding from the report was that the percentage of credit unions that reported reducing fraud losses as an important fintech, again, I guess we'll just say partnership objective, shot way up this year. So why do you think that is? And also, what are fintechs actually doing to potentially help credit unions reduce fraud losses?
Well, the short answer is that it became much more important because the level of fraud is absolutely through the roof. It is absolutely ridiculous and cuts across so many different areas of the business: account takeover, account opening fraud, payment related fraud, check fraud is just absolutely huge. It's getting to the point where I'm beginning to suspect that the smartest people on the planet are fraudsters. And because when I look
You
at
know
what
what?
they do,
Fortunately.
when I look at
You know
what they
what?
do, I sit there and I
Yeah.
think to myself, oh my God, I never would have thought of that. Oh, shoot, that's it. I'm not smart enough to be a fraudster. But it is, it is a byproduct of the fact that we have become so digital, and that has enabled new types of fraud. And we're always playing catch up with fraud. And we also have very weak regulatory responses to that. I remember having an argument with a former CFPB official at a conference a few years ago, and the topic was, can regulators keep up with the pace of technological change? I argued no, she argued yes, and it was the only time I ever actually beat a lawyer in an argument. So the reality is that fraud has increased, and there's a whole new factor on the horizon, which is AI-enabled fraud. I don't know if you guys read a week ago or so about the deep fake fraud, where somebody at some company was on a video Zoom call with somebody he
Yep.
thought was his boss, who authorized a $25 million transfer, and
Oh,
it was
yes.
not real.
Crazy.
Voice fakes. I have a colleague who took one of our partners' voices and, as a demonstration, said, look how easy it is, for me to go out and go, hey, leave a message and, make it sound like it's from Steve saying, yeah, I authorize you to move this money. So the AI enabled fraud stuff, guys, that hasn't even hit peak fraud yet. The good news is that there are a growing number of fintechs coming, and there's always been, the fraud prevention, fraud management, fraud detection companies out there, but new ones coming out, fighting fire with AI capabilities to kind of catch these things. With also the other thing, and it's not quite hit peak yet either, because real-time payments, FedNow just launched last summer. The volume still isn't very high, but that's, there's a growing number of people who think, oh, real-time payments equals real-time fraud. Not exactly true, but it will change how credit unions address payment fraud, focusing more on where the money is going and less about who's making the payment and whether or not there's money there. So a little bit different, but this fraud issue is absolutely at epidemic levels.
I think I have to 100% agree with you in the argument you had with the former CFPB official, in that regulators cannot keep up. And I think one really significant data point there that you could look at is how long it took for NCUA FFIEC to figure out social media. And that was at its basic levels. Ron, to go into a bit more of this relationship, You mentioned it earlier that fintechs have helped credit unions get into lending spaces. What types of spaces are you talking about there? And how are the fintechs helping connect credit unions to those lending spaces they maybe weren't in previously?
Well, I'll give you an example or two, but really the short answer, Michael, is it's all lending spaces that any particular credit union isn't in at the moment. It goes back to my comment about product development capabilities.
Yeah.
A credit union may look at its market and say, we're totally missing the opportunity here to lend in XYZ space. It could be installment programs. On the business side, it could be things like inventory financing. It could be any number of different type of lending offering. The problem that so many credit unions face is, number one, they have to design a product. Number two, they have to develop the capabilities to market it and sell it. Then they have to develop the capabilities to underwrite it and process it. It's so much easier if you've got somebody who's already taken care of it and can
Mm-hmm.
integrate easily and rapidly into your tech stack. And that's kind of what the whole digital movement has enabled, and why so many financial institutions are able to move faster. Prior to and this is, by the way, where some of them just are so hamstrung, is that they have core systems or digital platforms that don't easily enable integration from third parties. And they also deal with vendors who are not particularly friendly to or particularly good at integrating. And that's, kind of where the challenge and opportunity is. But, it could be as simple as things like getting into the buy now, pay later space, and offering pay in four or installment programs where they don't have it today. They don't have that capability. And there are a number of providers that are coming into the market to enable credit unions to do that, and could be, in any kind of lending niche area that they might not already be in, because they're focused a lot on just sort of mortgage or auto loan or kind of the big honking traditional lending spaces.
Right.
Right, sure. Another thing that's been gaining steam in just recent years is the concept of fintech investments. We've seen venture capital organizations pop up like True Stage Ventures, and Circle is another one. What were sort of the drivers leading credit unions to become these venture capitalists in the fintech realm? How did this start? Because this is really something that just started happening in the past few years here.
To some extent, it's funny when I look at the actual numbers in terms of what percentage of banks versus credit unions are making investments and the average dollar levels. There's still a higher percentage of banks, and of the banks that are making investments, they're investing a hell of a lot more, which might be more of a reflection on the fact that there are a lot more larger banks than there are large credit unions, because we're talking about the amount of money. But I was kind of surprised by that, because I think the whole QSO movement was a predecessor to this, as a lot of credit unions made investments in. What the hell is a QSO? It's a fintech. Come on, right? They don't call it fintech, but that's what it was, fintechs. So they've been doing this for a lot longer than the banks have. But again, it kind of goes back to the partnership aspect to this, which is, if there's a lot of firms out there that can help us create new products and services, improve our digital account opening, improve our fraud prevention and detection capabilities, then they probably can help a lot of other credit unions. And if we make an investment in them, then it helps secure the credibility and financial stability of that fintech, and also will signal to the rest of the market that this is a worthwhile, vendor, entrant, whatever it might be, into the space. So, there are a whole bunch of reasons driving the investment beyond just simply, clearly, the primary driver is return on investment, but there's an opportunity to kind of seed the new space. I also think that there are a lot of smart credit union CEOs and management teams out there who are saying, if we help the startup community become a little bit more stable through our investments and have more of an ownership, we'll have a better opportunity to kind of control and manage and direct those organizations where, man, I'm going to get some phone calls on this one. But, they're not particularly happy with the flexibility of some unnamed large technology vendors in the space today. So a lot of reasons driving that investment beyond just ROI. But clearly that's got to be the number one reason, of course. But, there's this opportunity now because of the huge number of fintechs and startups coming into the space want funding.
Ron, what are credit unions getting wrong, or maybe That's a little harsh, maybe missing the mark when it comes to forming a successful relationship with the fintech.
Yeah, I'm not sure that I would say that there's a lot going wrong with the actual relationship with the fintech itself. Where I think credit unions are either going wrong or perhaps deceiving themselves is understanding the level of resources that they need to bring to the table to do this successfully. In the surveys that I've been doing over the past couple of years, and by the way, this is pretty consistent across both banks and credit unions, financial institutions in the $1 to $10 billion asset range, of course, which there are many credit unions in that range, they average about 2 FTEs dedicated to fintech partnerships. And I look at that and just shake my head and go, how many
Amazing.
fintechs do you think you can identify, vet, negotiate, deploy, and scale with 2 people? And the
Yeah.
answer is not a lot.
Mm-hmm.
And so reality too is that, if your fintech partnership efforts are limited to one partnership a year, how much of the needle are you really moving with that? You need to be in a lot of different spaces. I've been arguing to a lot of credit unions and a lot of the board meetings I do that you've got to look at fintech partnerships and really IT vendor management as a whole as a competency, and understand that it isn't simply about identifying, vetting, negotiating, deploying, and scaling. It's really about integration. And this is where the crux of the matter is. You still got a lot of core systems out there that are not particularly integration friendly, even some digital platforms that are not particularly integration friendly. The vendors all want to charge a absolutely ridiculous amount of money to provide integration services. And by the way, they're not exactly willing to do it for you next week, next month, and maybe not even for the rest of the year.
Mm.
So what does that mean? It really means you got to have a team that's agile, fast, and really knows how to. I think the vetting, negotiating piece. That's not the crux of the matter. It's the deploy and scale, and that often means integration, and it often means business impact, because who's selling this? Who's deploying this? Who's using this? It's a whole new set of internal skills, capability, training, all that kind of stuff. I'm not convinced I'm not convinced that all of the credit unions who are getting into the partnership area are really thinking about or understanding the magnitude of the effort that's included here.
Right. Well, that's really interesting. And that actually goes right along with my next question, which was, is it important for a credit union to, appoint a specific person, a specific executive that's only managing fintechs? It's interesting because we get a lot of these career and new hire announcements, and we have seen a few come in where they're like, we hired a fintech partnership manager, but not many. I maybe seen like, I don't know, 3 or 4 come in like that. But would you say that's important then, is appointing like an executive to manage that, or having a team so they, can really focus on kind of communication with the fintech, and also maybe it's someone who understands the culture of the fintech so they can kind of bridge that gap?
That's an organization by organization case decision. I have been in the consulting / analyst world for a very long time, and I have seen the rise of the chief fill in the blank officer. And it is the most, it just drives me nuts when, wannabe influencers and thought leaders go, you need a chief fill in the blank officer. We're filling the blank, well, fraud's through the roof. We need a chief fraud officer. We need a chief customer officer. We need a chief member officer. We need a chief AI officer. You don't need, it depends on the organization. And what it depends on is the individual personalities. It depends on the role of IT in the organization. It also often depends on the role of marketing in the organization. But the fact of the matter is, if you're a credit union CEO and you're looking at this, it seems very expedient to just go, well, I'm just going to appoint a chief fintech partnership person and they'll take care of it. But who is that person going to be? Man, that person has to have an amazing set of skills. They have to understand the business. They have to understand the technology. They have to understand the fintech world. And they have to be the kind of person who works really, really well with everybody else in the organization. I don't know how many people like that you know. I don't know a lot.
No.
So it may not work that way. On the other hand, you might have an IT department that's not particularly on the leading edge of things, doesn't know the fintech world very well, does not have a great relationship internally. So having your CIO appoint a chief fintech partnership person, that might not work. The other thing is that you got to recognize that what you're trying to build is a capability or a competency. And I would be inclined in many organizations to look at it and go, look, there's nobody here who is a good fit for this now because of their knowledge of the various pieces and their relationship and respectability internally. So you will need somebody from the outside. But the role of that person is pretty much, it's funny, I had a conversation years ago with a buddy who went from a community bank to a much larger bank as their chief innovation officer. And I had dinner with him here in Boston right before he was starting his job. And I said, want to make a bet? He goes, why, what's the bet? I go, 3 years from now, you'll be out of your job. He's like, He's like, what?
Almost
I
noon
go,
every. Yeah.
you've got 3 years to have impact. Now, what's going to happen is you're either going to flounder and fail and you will be out probably within 2 years, or you will succeed and you will get a much better position, a more operational, you will have a P&L focus because you've been successful. Somebody's going to want you and move in. And he was out in 2 years. You're building a capability and a competency and you're moving on. You're not building a organization that, because this stuff has to kind of permeate, you build a capability to do it and it moves back out to the traditional and established functions in the organization. So, organizational structure stuff is hard decisions to make. And I really resist the idea that you can just create a chief fill in the blank officer for every problem you got and think that that's going to solve the problem.
One last quick question before we head into the final segment here. Is there a fintech that you find particularly unique or interesting right now that maybe we should be keeping our eyes on?
I think there's a lot of interesting ones. You need to give me a little more kind of structure. I mentioned Panacea. I really, really like them, by the way, because it's a niche that I believe is huge. And they're not just your typical neobank that goes after prepaid debit card stuff. They are doing a lot of lending and really integrating themselves into the day-to-day operations of their customer base.
Yeah, I guess the question was maybe a little bit too broad, but honestly, I was thinking, I wonder what fintechs are not pissing off Ron right now.
Well, let's go to the category level for that.
Okay.
And the ones that I am really, really interested in seeing what their evolution is going to be is this group of fintechs that are really become sort of integration platforms. I go back, guys, to the problem that many credit unions have, which is no shortage of great ideas, but how do you make it happen? And what often happens is that the existing tech stack or infrastructure becomes a huge hurdle to enabling anything because of the integration problems. But you've got companies like PortX, Core10, who's the spinoff down in South Carolina. They're going to kill me. Constellation. I got a call from Chris Kovacs coming. These are the companies that are enabling credit unions to really rethink how to integrate and do these things. Some of the payment platforms like a Finzly, very interested in that kind of focus as well. It's not that they don't piss me off. It's that I think that they are filling a huge, huge need and interested to see kind of how they evolve over the next couple of years.
Fantastic. All right, Ron, we're going to move into the final segment, which these are questions all about you personally.
Well, that's not fun.
Oh, no. This will be fun. This will be fun. All right. So we can tell that you are at least somewhat of a music guy because your last couple of annual Cornerstone reports were filled with some song references. So the question is, what was the first album you ever bought?
Oh, gosh. There's no way I could possibly remember the first album I ever bought, but I do remember the first album I ever got. My grandfather worked for the Federal Communication Commission many, many years ago, and part of his job was like issuing tests to DJs because they needed to get certified, whatever, through the FCC. And he administered a test to some DJ who was so happy that he passed the test. And he had a couple albums in his hand, and he gave one of the albums to my grandfather, who gave it to me. And that album was from Country Joe and the Fish with the Fixin' to Die rag. Well, it's 1, 2, 3. What are we fighting for? Don't ask me. I don't give a damn. And that was the first album I ever got.
Thank you for that story. See, I told you this would be fun.
And Ron, hopefully you can remember this one. What was the first concert you ever attended?
Oh, that one I remember too. That has a story behind it as well. So I went to
Uh,
sleepaway camp when I was a kid, the Berkshires in Massachusetts. And this camp was located across the street from this thing called the Lenox Music Arts Festival, and just down the street from something a hell of a lot more familiar to everybody, Tanglewood. But there was this thing called the Lenox Music Arts Festival, literally across the street from the camp. And one night, a couple of my buddies and I snuck out of camp to go see the concert that was there. And it was Mahavishnu Orchestra with Jean-Luc Ponty and John McLaughlin, Billy Cobham on the drums. And it was an experience that I'm sure altered and ruined my life, just seeing what was going on. And it was, you can only imagine, early 70s, Mahavishnu Orchestra, what the crowd was like. And I was like, I don't think I've ever seen these people before. That was my first concert.
Oh, Billy Cobham was a huge fan of his. Also, not me, but friends of mine tried to get into Tanglewood unsuccessfully. So I know exactly where you were there. What's your most listened to song right now on Spotify, Apple Music?
Oh, shoot. So I have this app on my Mac, and it's from a online radio station called Soma FM.
Okay.
And they actually have a whole series of channels. And the one I listen to the most is called Sonic Universe, transcending the world of jazz with eclectic avant-garde takes on tradition. And I just pop it up to see what the last bunch of songs they played was from Ibrahim Malouf, Weather Report, Carlo Brand X, High Showers. Haven't heard of most of these, but what I like is, obviously I'm into jazz. There's Miroslav V2 from Weather Report. It just turns me on to a whole bunch of stuff I would never have heard if I was picking stuff on Spotify.
Fantastic.
Now we had just a couple of non-music related questions. What was your first ever job as a young adult? Like after school job, summer job, something like that?
So I worked in the sporting goods department of a Sears in the local mall.
Okay.
And it was actually a great job for to sports. So it was but the hard part of that job was, you got to remember, I was a nerdy kid from the suburbs, and Sears sold guns. So, you had people come in and go, hey, can you help me pick out a gun? And I'm like, I'm 16 years old. I'm a nerdy kid from the suburbs, and you want me to help you with a gun? No.
Oh, fantastic. Wow. How much you get paid per hour?
Oh, my God. Well, if I tell you that, it will only reinforce that I am really old, and my wife hates when I let everybody know how damn old I am. So
we will move on. That is fine. Last quick question. What was the last movie you watched?
Wife and I just saw Oppenheimer on Peacock.
Oh, what'd you think?
Hated it. Actually, honestly, it didn't really kind of do it for me. After all the hype, it's kind of slow and boring. There are no car chases, nobody getting into a fight, nobody blowing up. Nobody got blowed up. Come on. It was I find it a little boring.
Just the world blew up.
I like spy movies, I need a little more excitement in those movies, or funny, something like that. So I honestly kind of found Oppenheimer boring.
Okay. Well, stay tuned for Jake Gyllenhaal's Roadhouse.
That remake's
coming out. Ron, you have a podcast of your own, right? Where can people find that and connect with you?
So, it's called What's Going On in Banking, which is also credit union, by the way. And it's on Spotify, all the podcast channels. You can find it, links on the Cornerstone website as well. Best place to find me, though, is I'm on LinkedIn all the time. Ron Shevlin, please connect. And also write a blog on Forbes called the Fintech Snark Tank. You can get 5 free articles on Forbes every month without subscribing. So don't waste your views on Ron Shevlin articles.
Okay.
Well, Ron Shevlin from Cornerstone Advisors, thank you for sharing your time and knowledge with us today. It's been a real privilege to have you on the podcast.
Thanks a lot.
Yeah, thank you. And for our listeners, please subscribe to Shared Accounts with CU Times anywhere you get your podcasts, Apple, Spotify, Google, wherever. You know how this works. And if you'd like to rate us, we would love your feedback. And for those of you with questions or comments, feel free to email me over at nchillingarian@cutimes.com, or you can email Michael at mogden@cutimes.com.
That's right. Also, if you want some data-driven, nerdy details on DEI and credit unions, subscribe to our executive briefing at cutimes.com/subscribe. In March, we're going to be exploring that issue inside our executive briefing. It's only available to subscribers. It's not online. It's a new topic each month. So So check it out, cutimes.com/subscribe to get the executive briefing. Thanks to our producer, Zach Nyheisel. Join us again next week for more FinTech topic discussions. Until then, thanks for listening.